If you're hoping to buy a home with no down payment, a USDA loan might be your best option. But getting approved takes more than just filling out an application. In this video, I'm breaking down exactly what you need to do step by step to get approved for a USDA loan. Step 1 is understanding the two types of USDA loans. There's the USDA guaranteed loan and there's the USDA direct loan. The guaranteed loan is offered through USDA-approved lenders. It works a lot like a conventional or FHA loan. You apply through a lender, get pre-approved, and go through the typical home buying process. The direct loan, on the other hand, is funded and underwritten by USDA Rural Development directly. It's designed for buyers with low or very low income. The application process is different, the qualifications are stricter, and you apply through your local USDA Rural Development office, not a regular lender. I have other videos that break down the differences between the two programs in more detail, so check those out if you're not sure which one you qualify for. Step 2 is making sure your income qualifies. You'll want to use the USDA Income Eligibility Calculator, which lets you check your total household income against the limit for your county and family size. For the guaranteed loan, your income usually needs to fall below 115% of your area's median income. For the direct loan, it must be 80% or less of the area median income. And just a heads up, USDA counts the income of everyone in the household, not just the person applying for the loan. So if your spouse, adult child, or roommate earns income and lives in the home, that can count toward your total. I'll include a link to the USDA income calculator and other helpful resources in the video description. Step 3 is reviewing your credit and debt. USDA doesn't publish a hard minimum credit score, but most lenders want to see a score of at least 640 to approve the loan automatically through their automated underwriting system. If your credit score is under 640, some lenders will still consider you through manual underwriting, but you might need strong compensating factors. That might include things like a clean rental history, extra savings, or a low debt-to-income ratio. I'll talk more about DTI in just a second. Before applying, it's a good idea to check your credit report and fix any errors that could be dragging your score down. Lenders will use your FICO score, which may be different than the score that you can see on Credit Karma or similar websites. Sometimes your credit card company or bank will provide your actual FICO score. That's the one to focus on. Now let's get into debt-to-income ratio, or DTI. DTI is the number lenders use to figure out how much of your income is going toward debt. There are two types, front-end DTI and back-end DTI. Front-end DTI looks only at your housing costs. That includes your estimated mortgage payment, interest, property taxes, homeowners insurance, and any HOA fees. Back-end DTI includes all of your monthly debts, so it includes your housing payment plus car loans, student loans, credit card minimums, personal loans, and child support. It doesn't include utility bills like electric, phone, or internet. Here's a quick example. Let's say you make $5,000 a month. If your total monthly debts, including your projected mortgage payment, are $2,000, then your back-end DTI is 40%. For the USDA guaranteed loan, the typical maximum DTI is 34% for front-end and 41% for back-end. In some cases, it can go up to 44% with strong compensating factors like a high credit score or larger savings. For the USDA direct loan, the limits are even stricter, 33% front-end and 41% back, and those numbers are capped. They won't go any higher. This means USDA can be more strict with DTI than other loan types, so you may need to pay down debt or reduce monthly obligations before applying, especially if your income is right on the edge. You can go to my website at workwithdang.com for free resources like a quick start home buying guide and a home buyer's course. I can help you find a real estate agent in your area. There's more information on my website. I make videos like this every week. Please subscribe if you haven't already. Step 4 is choosing a USDA-approved lender, and this only applies if you're going after the guaranteed loan. Not all lenders offer USDA loans, and among the ones that do, some are way more experienced than others. There's a link in the video description where you can find a list of USDA-approved lenders. I recommend talking to at least 2 or 3 of them to compare interest rates, fees, and how familiar they are with the program. Ask questions like, how many USDA loans have you closed in the last year? Do you offer manual underwriting? Can you walk me through what the process looks like if I don't qualify for automated approval? Also, make sure to ask about their lender fees, things like origination charges, underwriting fees, and application fees. Those can vary a lot between lenders and they can add up quickly. Now, if you're applying for the direct loan instead of the guaranteed loan, you don't need a lender. You'll go directly through the state's USDA Rural Development office. I'll drop a link in the description to help you find your local office. Step 5 is gathering your documents. Whether you're applying through a lender or directly with USDA, you're going to need a good amount of paperwork, and having it ready up front can help you avoid delays. You'll need 2 years of W-2s and full tax returns, recent pay stubs usually from the past 30 days, recent bank statements, proof of any other assets, and a valid government-issued ID. If you're self-employed or have irregular income, be ready for extra documentation. That might include year-to-date profit and loss statements, 1099s, or additional tax schedules. USDA is very documentation heavy, especially for the direct loan, so being prepared will make the process much smoother. And just so you know, this is sort of a starter. Depending on your lender and your situation, there may be more documentation that you need to provide. Step 6 is getting pre-approved. For the guaranteed loan, this means submitting your paperwork to your USDA-approved lender. They'll calculate your DTI, check your credit, and issue a pre-approval letter if everything looks good. That letter shows sellers you're a serious buyer, and it tells you how much house you can afford. If you're going the direct loan route, the process is different. You'll contact your state's USDA Rural Development Office and request an application. Once submitted, it can take several weeks or even a few months to be reviewed. If you qualify, they'll issue a certificate of eligibility, often referred to as a COE, which allows you to start shopping for a home. But keep in mind, this isn't always a green light to begin house hunting right away. Sometimes USDA may ask you to wait until they confirm that funding is available for your area. That's why it's important to stay in contact with your loan processor or USDA office and double check when you're officially clear to move forward. Also, if the direct loan application feels overwhelming or confusing, there's help available. You can work with what's called a loan packager. These are trained professionals who help you complete the paperwork, help you gather your documentation, and submit your application to USDA. Some USDA offices even prioritize applications that come from packagers because they're usually more complete and accurate. You can ask your USDA office if they know of any loan packagers in your area. Step 7 is house hunting. Once you're approved or you have your certificate of eligibility, it's time to start looking at homes. But not just any home. You need to make sure the property is USDA eligible. You'll use the USDA property eligibility map, which I'll link in the description. You can type in an address or explore an area to see if it qualifies. USDA loans are meant for rural and suburban areas, but don't let the word rural scare you. Many homes just 30 to 45 minutes outside of major cities still qualify. Check eligibility before falling in love with the house. Not every property will qualify, and it's a huge letdown to find the perfect home only to realize it's ineligible. Also, keep in mind that USDA homes must meet specific property condition standards. That includes functional plumbing and electric systems, no major structural issues, safe access to the home, and basic safety standards. If you're not sure whether a home qualifies, ask your agent or your lender to review the condition guidelines with you. Step 8 is getting under contract and submitting your full loan application. Once your offer is accepted, your lender or USDA office, if it's a direct loan, will gather the remaining paperwork, finalize your file, and submit it for approval. If you're using the guaranteed loan, there's an extra step. Once your lender approves your file, it still has to be submitted to USDA for final sign-off. This USDA review can add a few extra days to the closing timeline, so make sure to plan accordingly. If you're applying for the direct loan, everything stays within the USDA office, but expect a longer timeline. The direct loan program moves more slowly, so don't expect to close in 30 days. It might take closer to 60 or even 90 days. Step 9, and this is the fun one, is closing on your home. Once USDA signs off, your lender will schedule the closing date. You'll go to the title company, sign the final paperwork, pay your closing costs if they weren't covered by the seller or through assistance, and officially become a homeowner. Now remember, USDA loans don't require a down payment, which is a huge win, but you'll still have other costs like an appraisal, inspections, and lender fees unless those are negotiated or covered by assistance. The USDA loan process can definitely feel overwhelming at first, but it's totally doable, especially if you plan ahead, work with the right lender or USDA office, and stay organized. I've helped a lot of buyers navigate this step by step, and I can tell you, USDA is one of the best tools out there for affordable homeownership. To learn more about the USDA loan, check out this video. Please like, comment, and subscribe.